for someone who owns thousands of crores, right? How would they spend?
The third generation usually kind of,
Yes.
completely destroys the wealth.
Yeah. So if we had to distinguish a family office from a wealth management company, right? So what are the additional roles that you play?
Ring fencing the assets. If I'm an entrepreneur who has also got some, have taken debt into my company or has got some leverage, then I need to ring fence my personal assets.
Wealthy are only getting wealthier, right?
So the investment policy statement will have all the do's and don'ts when you're doing an investment.
They had invested in some FDs in Ghana or some other African country where they were getting 50% returns on their FDs, right?
The reason why a trust is set up by families is, one, it is clearly a succession vehicle.
Okay.
And you want to have a trust structure for the succession rather than directly going into the family's hands.
Family office in China, and she said you should see the kind of requests that you get. I mean, it's like, I just want to spend the day shopping in Paris tomorrow.
Younger generation is not keen to manage the day-to-day aspects of wealth management.
So family offices have been investing more and more into startups, right?
In fact, that's the most efficient way of transferring money.
Any tips and tricks from these family offices that can be applied to retail investors as well?
Family offices work well when they follow this 3E strategy.
It's been actually very heartwarming to see, because in India suddenly philanthropy is happening a lot more than it was happening earlier, right? Especially with the first generation entrepreneurs. Sreepriya, welcome to the Property Angel podcast. It's always a pleasure having another woman on the show, which doesn't happen very often.
Yes.
So today we are here talking about the concept of family offices in general and their relationship to real estate.
Sure.
You are, of course, the co-founder of Entrust, which is one of the most well-established family offices that at least I'm aware of. And you manage Nanda Nilekani's wealth, so that says it all. To start off, can you help us understand what is a family office and who it caters to?
Sure. Thank you, Sapna, for hosting me. And it's a pleasure talking to another woman in this space, which is very good. So, family office as a concept is relatively new in our country. I think in the Western world, it is well established. In India, over the last 1 decade or maybe closer to 2 decades, the concept is evolving. And so the whole idea of family office is, it is an office set up by the family. So that means it's a professional team who will help you with managing your estate in a very professional manner, bringing in governance structures, robust process, and helping you to customize the portfolios and the investment management process, etc. So it's an office set up by the family in a very shorter or a nutshell to say. And so typically family offices are set up by the entrepreneurs or business owners who have kind of seen or created significant wealth, where they also want to maintain a distance between their operating business and their wealth or the personal wealth, which probably will be a family inheritance, right? So it's a multi-generational wealth which they would like to distinguish from their operating business and diversify. And again, family offices initially used to be a wealth management kind of an alternative form. But I would say there's a wealth creator space now. So the second gen and the third gen is looking at family office as a platform where they can help creating the wealth in a different form, diversifying or looking at other investment opportunities, which itself can be highly, growth oriented. And also, there is this concept which we all have learned and heard about, the third generation usually kind of completely destroys the wealth. So family office stands very tall and quite helping these families to safeguard the wealth across generations. So that's a very important role. And one of the reasons mainly families set up or consider having a family office is this, that the next generation also has this enduring legacy.
This podcast is brought to you by Property Angel, the award-winning property management platform trusted by absentee owners since 2014.
Got it. Is there some threshold of net worth that one can become eligible for a family office?
I would say the threshold could be a 50 crores and above for setting up a single family office. Not even 50, it's 2000 crores and above for a single family office.
Okay.
But anything between 50 to 2000 crore, we categorize them under our multi-family office practice. So you don't have to necessarily set up a team, have a dedicated team to manage your affairs. You can have something like a multi-family office where there are experts who can handle your estate and wealth management and other aspects. So there is this concept of multi-family office, which is again evolving. So we fall in that bracket. So we have the capability of setting up a single family office and also offer multi-family office services for our clientele who are from 50 crores and upward. And
understood.
anyone lesser than that. So again, family office is more a lifestyle requirement, I would say. Somebody who's in 10, 15 crores today, and probably he or she is an entrepreneur who's probably wanting to have a dedicated team to take care of their managing money, assets, etc., but want to continue focusing on their core strength, business, or developing some new technology, etc. They also can choose a family office because what you're ultimately getting is a professional team to manage your estate. And you're also empowering the team to take decision on your behalf. Because what happens, even if I have 15, 20 crores, the time I spend on managing the wealth, doing portfolio reviews, talking to the various bank relationship managers, etc., is a lot. And many times people don't want to spend their time. They would rather focus that energy and bandwidth on building their businesses. So we always say that, we are advocates of saying that even 10 crores and upwards, you can think of associating with a family office, but again, not a single family office, have a multi-family office.
To distinguish between a single family and a multi-family office, for a multi-family office is set up like entrepreneurs like yourself. For a single family office, who would that be owned by? Would that also be a separate business entity, or would it be run by an employee of the family business itself?
No, so again, there are two types. Some of the families, they have either identified a senior member within the family, like the eldest son or the eldest daughter who takes over management of assets. That is one possibility. But there are also families where their children, probably the younger generation, is not keen to manage the day-to-day aspects of wealth management or estates, etc. But they can hire a professional team who will be enabled to handle this family office for them. So family offices are either owned and run, managed by the family members, or it can be outsourced to a professional team, but still overseen by the family. Yeah, that's also possible. So there are families where they have an investment committee. For example, the investment committee would be a set of professional team members, but will have one person from the family. Say the senior member of the family would be there in the investment committee who can be the decision maker. So that is
So are all your customers family businesses, or do you also have professionals?
We have a lot of professionals, thanks to being in Bangalore. In fact, we enjoy working with our clients because most of them are either first-gen entrepreneurs, techpreneurs, or they are professionals who have created wealth in this, the what you call ESOP, or over the last 2-3 decades of the growth story in India, especially from the Silicon Valley, where we are in Bangalore. So not necessarily business families. We haven't had many business families.
So what's the percentage allocation between business families and the professionals?
I would say 90-95% is professionals which we are managing. In fact, that's the reason we always believe in this wise wealth concept. That's a term which we coined after around 4-5 years of existence in our family office business. We realized that most of our clientele, which we had, thankfully, is all first-gen entrepreneurs who have built businesses, who have created wealth, and have also created a lot of impact to the society in terms of having a lot of job creation opportunities, creating wealth for the employees, and all of that. So we felt that wealth is not just something which is a transactional thing, which wealth is also to mean that you have the capability to now create a much more bigger impact in the society. And the wealth is created in a clean, simple manner. And also they believe in continuing this to be a very simple, transparent, and easily possible to go for the next generation, transition to the next generation. So we believe this is a wise wealth kind of a journey.
Okay.
And thankfully we have been associated with such clientele who believe in the same philosophy.
Okay.
So we are again advocates of
Yeah.
this philosophy widely.
So if we had to distinguish a family office from a wealth management company, right? So what are the additional roles that you play?
Okay. That's a very good question, because everyone usually compares and thinks that family office is all about managing money and wealth management.
Yeah.
But we clearly say that we are not a competition to the wealth management, or we are not into that space only. Wealth management is just one aspect of what we do. Invariably, most of the families will have various other things which they want us to support with. Like, for example, the multifaceted requirements like your taxation, compliance aspects, legal services, managing their property for some instances, real estate purchase, or buying or selling of transactions, having a will in place, or setting up a family trust, for example, or setting up a new company for some requirements. So each family has their own unique requirements. So we have been from the beginning, we believe that it has to be a tailor-made solution for each families. So we are very bespoke and customize the solutions for each and every family we work with. Because some are very investment focused, but some are, they say that I already have so much of real estate in my portfolio. So help me in probably selling some of these real estates, and then you can manage that money. So for us, the foot into the door would be handling the real estate part of it. That's why we have built a capability in-house with a team who can handle the property management as well as real estate service. And in India, most of them, invariably, at least older generations, they used to have a lot of real estate properties. And that is a very strong asset class in their portfolio.
So I was at a family office conference recently, and this topic came up as to what percentage is allocated to real estate. And somebody commented that family offices or wealth management companies haven't figured out how to monetize real estate management, which is why there's always advice to exit that and invest in other asset classes. So what's your take on that?
No. So I think one is real estate definitely is a major part in most of the portfolios. And some are by design, some are not by design, but it could be inheritance where you do not have an option. So over a period of time, we help them if they want to, reduce their holdings in the real estate. We help them. There are, of course, we don't just suggest a sell immediately. If the property is good, and if it is in a right place where you see there is a huge potential upside, we will not definitely tell them to go and sell it, but we will help them to manage the property and see at an appropriate time when we can exit, when we get the good buyer and at right time, etc. So many clients have given us the property management mandate only to manage these properties. As and when there is a time for exit, they will tell us. Or the mandates, like some of the families want to put all their documents in order. So some of the inheritance properties, we see that the documents are not in order. And you have maybe one or two documents which are missing. You need to send somebody to the government authorities and get it, procure it, get the title deed prepared, cleared, etc. So all of that, we call it as sale ready documentation, and we help them. So that is one service which we do for family office clients.
So in terms of, these are more transactional sort of activities, or would you actually manage like a rental property? So like for us at Property Angel, we manage rental properties. We charge a small percentage of the rent. So is that also something that you would do, or is it more transactional,
I get it. So it is not our forte by itself, but for our family office clients, at least 2 or 3 of them, since we have the holistic mandate to take care of everything, we have got 1 or 2 people in house in the team who can take care of their properties. In the sense, there's a tenant who's already occupied, so we just have to ensure that if there is any requirement from the tenant, we would just take care of it. Or if the tenant moves out, then we can just help them to get another tenant and get the documentation done, lease agreement and all of that. But by itself, property services or standalone product we don't generally give. That is not our comfort area
Yeah.
because it
Yeah.
involves a lot of, that.
Yeah.
So it's a very challenging and operationally intensive
It is
kind of
true.
a process.
That is true.
So it's difficult.
Yeah. So you
And
can think about
yeah,
outsourcing
definitely.
to us.
Yes, yes.
We'd love to manage your clients' properties.
Definitely. If that
Um,
helps.
so in terms of the revenue model, right? Like how would your revenue model be in terms of managing across the asset classes?
Okay. So our revenue model is purely fee based.
Okay.
So our principle is conflict free advisory model. So for every mandate which we take, there will be a fixed fee which we would propose, and the client agrees to that fee. And it's purely fee based services. All of these services. There is no other hidden cost from our side. There's no other brokerage or commission which we would earn from any third party product manufacturers or service providers.
Yeah.
So it's complete transparent, no conflict engagement with our clients. So even if we do a transaction in the real estate front, we will upfront say that these are the costs involved and this is what we would be providing you as service, the scope of work. And if the client agrees, we will do it. Wherever we have our own network, we can source a buyer or a seller, we will do it. Otherwise, we will engage a broker. So we will tell the client there is a brokerage fee which will be additional, or within the fees what he is agreed to us, maybe we will have to share that with the broker. So it's complete transparent fee based model is what we work with.
Okay. So there's no percentage of net worth or anything else.
So it is percentage of net worth.
Okay.
Obviously, the fee is fixed basis the percentage of assets or the complexity of the estate, because some of them would have primarily in real estate and not liquidable assets. So I can't just say a percentage of asset. So it will take time, but there is complexity of handling the property, some kind of operational work. So it purely depends on the percentage of assets, if it is financial assets, or it would be a combination of a percentage plus some kind of a fixed retainer because there is other operational work or a real estate mandate or something like that.
Okay.
Yeah.
So I was reading on your LinkedIn profile that recently you had managed a sale of or a purchase of a 100-year-old tea plantation, right?
Yeah.
So that's more of like an investment banking sort of a
Yeah,
role.
it
So
is
you
correct. Yeah.
play that role
So
as
that
well?
was a requirement which came from one of our clients, and it is actually a takeover of a company which held this tea estate.
Okay.
So it's more an M&A transaction. And since there is a resident or there is a property also involved, we had to do multiple level of diligence.
Okay.
Property diligence, legal documents, the company related documents, company secretarial papers, diligence, all of this. So it was almost a 6 month exercise.
Wow. Okay.
Our entire legal team, our CFO, and of course the MD, myself, operating officer, and we had to engage the third party advocates as well, third party legal team, another professional firm for tax diligence. So it was a whole lengthy 4 to 6 month process, but it got completed successfully. Yeah,
Okay.
it was a very good one.
So you have business advisory services as well, right? But to advise on business, you need experts in that particular industry. So how does business advisory work?
So it is a combination of both. So we have business advisory team members who have worked, who have been in businesses, who have held very senior CXO roles, etc. So they can give certain perspective. And of course, we go to external consultant wherever required. We are tied up with many of these leading firms.
Yeah.
So wherever it is required, we have empaneled quite a few. So we go and take their expert opinion as well. But primarily our advice would be either in the fundraise, structuring of the fund, or any strategic guidance in terms of hiring a senior team member, senior CXO level person for the company, etc. Or fundraise, whether there's a right time, how do we structure it, what kind of evaluation. So all of this are kind of common across all the sectors.
Yeah.
So it's not a sector specific.
Okay.
Yeah.
So talking about investment planning and wealth management, which is one of the core activities that you do. From what I understand, the different asset classes are one, real estate, then you have securities which could be listed or unlisted, you know, like your private placements or startup investments. You have the cash FD component, of course, and then you have commodities, precious metals, and alternatives, which could include your art and crypto, right? So do you advise across all of these asset classes?
We have capability to advise across all of this except crypto. Crypto, we do not do it. We have never done it. And so far, there is no comfort because firstly, it is not regulated in India. So we wouldn't want to do it. Art is a very case-to-case basis. There have clients who have come to us, requested for certain, specific art collection, suggestions for art experts, museums, or, some connection to them, which we have done. Yeah. So these are all very selective basis. So like I said, for every family, depending on their requirement, we have to like customize and give our advice and option. Again, philanthropy is another one. So again, it is selective. So some clients come forward saying that I would like to have one part of my portfolio allocated every year towards a philanthropic cause, which I would like to give. So that's another aspect which comes into the overall advisory.
So that's been actually very heartwarming to see, because in India, suddenly philanthropy is happening a lot more than it was happening earlier, right? Especially with the first generation entrepreneurs.
Correct.
So is this more like charity and charitable organizations, or is this more in terms of social enterprise, investing in social enterprises?
Both. It's again, we see the trend where there's a mix of social impact related enterprises, plus there is direct philanthropy into foundations and charity organizations. Both are there.
Both are there.
Yeah.
Okay. So
But I would say personally, I think I always believe that if it is impact investing, you might as well look at philanthropy and don't mix. This is purely a personal comment, not from my organization. Don't mix the investment part into your philanthropy part. It's like how those days, people take insurance product, a ULIP product, saying that it is a mutual fund investment. I would say impact fund is an impact fund, but if you are looking for returns, don't get into impact fund. Look at some other fund, the normal funds, and then philanthropy is separate. So if you are allocating a portion for philanthropy, it should be a separate bucket and has to be channelized towards the organizations which you want to support with.
But it's also good for even an NGO to become self-sustainable, right? So if they can invest in enterprises that are a social enterprise and ultimately start making profit, that they can self-sustain.
Yeah, that option is also there. There is a model. In fact, Section 8 companies are there. There are many Section 8 companies which are set up for this purpose, that you run like an enterprise. You have your P&L. You also do that, but it's primarily a non-profit organization. So it's a mix of both. Yeah.
So in terms of all of these asset classes we spoke about, right? Typically, I'm assuming the major investments will go into either real estate or securities, right? So how do you allocate wealth across all of these asset classes on the average?
Okay. So it's we have a very robust process of engaging or onboarding with every client. We first understand the risk profile of the client. Then we do investment policy statements or a kind of a framework, which then becomes your guiding path for the investment journey. So the investment policy statement will have all the do's and don'ts when you're doing an investment. When you're recommending a product, what suits to the client, what are the kind of asset classes which I can take to the client. Within the asset class, how much percentage, there will be a prudential limit set for each of this. Like, for example, if it's a closed-ended product, a locked-in product, then I would have a certain threshold. So there are various parameters. All of this is captured in the investment policy document. And then that becomes our guiding path and a framework. So based on the investment policy statements, then the asset allocation will happen, and the advice would go based on these. The overall asset allocation, which has been agreed with the client, basis the IPS, and IPS is the investment policy statement. And then an advice would be sent. Once the client approves, it gets invested. So ours is purely an advisory model.
Got it. So talking about risk profiling, right? I mean, you hear the concepts of wealth preservation and wealth accumulation or appreciation, right? Now, obviously, anybody would want to preserve their wealth and capital and would want to maximize, the appreciation as much as possible. So, does risk profiling only mean short-term volatility? And is it that somebody with a higher risk profile will, on the average, always make higher returns on the long term?
Obviously, higher risk, higher returns. The more risk you take in your portfolio, obviously, there's a potential to give higher returns. So capital preservation and capital appreciation is totally two different things. I would say a capital preservation kind of a client who's oriented towards preservation style would more be a moderate or not conservative risk category. He or she may not want to have too much of allocation into equity linked products because there is risk factor there.
Yeah.
He or she would prefer portfolio to be more fixed income or some balanced kind of a portfolio where capital is preserved. That's the first criteria. So the
Okay.
risk tolerance level is very low
Okay.
in a capital preservation style client. Whereas on the capital appreciation, your idea is to enhance the portfolio yield by taking exposure to riskier asset classes or having exposure to growth oriented kind of stocks or funds. That will be the capital appreciation. So there the risk tolerance is very high.
Got it.
Yeah.
So recently we were talking to somebody and they said that they had invested in some FDs in Ghana or some other African country where they were getting 50% returns on their FDs, right? So are there some similar unconventional sort of investments that you have made?
No, definitely no. Again, for the reason that we are a SEBI-registered firm.
Okay.
So any investment advice which we give has to be it all goes through the SEBI's, the advisory, the regulations what has been given to us.
Yeah.
And I don't think there's any fixed deposit in India at least which can give these kind of rates. So
Okay. So family offices have been investing more and more into startups, right?
Yeah.
I mean, earlier it would be through a VC, now it's happening even
Yes,
directly.
yes.
So do you help with the entire
Yes.
startup investment?
Yes.
How do you source startups? How do you value them?
Sure, that's a great space now, and it's a emerging trend, I would say, because because you have a family office now. It was not there earlier. It was only
Yeah.
wealth management firms. Now you have a family office. Either it is dedicated your own set of team members, or it is a
Yeah.
professional team.
Yeah.
But you have somebody who's dedicated to understand the investment, the private investment, and families are more comfortable because again, if they are a business family, they are very happy engaging with the promoter directly, having conversations of how he or she, an entrepreneur, has built the business.
Yeah.
What are his challenges? What he has gone through, and what is that potential he is seeing, he or she is seeing. So that is kind of very interesting for our investors, like our clients, right? So a family office client finds this not just as an investment, but also a very I would say appealing and
Fun,
it is it's very interesting because I am as an entrepreneur can do only one business which I've been doing it or I'm successful. But how do I now leverage my skill set? Maybe also by getting involved into a business by means of an investor's role. I get to talk to the promoter. Obviously, most of the time, family offices, one, they have the patient capital.
Yeah.
So they understand the journey would be a long term. It will go through certain ups and downs, all of that. Second thing is they get to talk to the promoter. They understand the mindset of the promoter. And so their understanding and the alignment with the promoter, once that happens, they are like readily, they kind of say that, okay, I would like to make this investment because I feel what he or she is talking makes sense. And the sector is promising and numbers look good, or he or she has the capability to deliver the kind of numbers. So they get that feeling and then they are happy to make those investments. And we as a family office help them in this journey completely, right from sourcing the deals.
Okay. How do you source deals?
Sourcing, I mean, today it's very easy. Again, being in Bangalore, you are in part of many startup ecosystem. You attend so many events and conferences, conclaves. So you get to hear a lot of news around that. And also people send mails, meaning there are firms, VC funds globally as well, who keep sending mails and mails directly to the clients because some of them are successful entrepreneurs. So they directly send emails to the client and they forward it to us. Or we also get mails directly into our family office inbox. So we help them in sourcing good leads, good deals in this space, and then evaluate them. So we have a team who does the evaluation. And then we recommend to the clients. And after the investment, okay, so while doing this investment also, in private investment especially, there's a lot of structuring and, you have to take care of the documentation part, the diligence, the shareholders agreement, it goes through the review. You have to see that the investor rights are all taken care, right? So all of that part we support. And then post-investment also, ensuring that the documents are all stored and, safely kept in one place, in one folder. And then if you have to follow up for the CCD document or the CCPS or the shares to be dematerialized, all that we will take care. Plus, on an ongoing basis, if there is any communication which is required between the company and the investor, we will act as a medium for that. So
Okay.
the client is not disturbed frequently because we are connected to the investee company.
Yeah.
So we will be the one point contact for them. So general reporting, like as and when we get a reporting from the, in case if we do not have a significant stake, obviously the companies will not give us access to the MIs and the reports. But here again, we have an interesting concept of CFO services.
Okay.
So some of the companies where we have invested, we have also taken a mandate of being a CFO service,
Okay.
a shared CFO service
Okay.
with these companies. So that gives an access, obviously,
Yeah.
to the whole of
Yeah.
finance
Yeah.
and the accounting MIs.
Yeah.
So that also helps. So we
Okay.
provide these MIs to the clients on a regular basis, and timely we will update on how the growth has been, how do we see the exit plans shaping up, etc. And at the time of exit, obviously, again, considering the tax optimization, each client would need separately, we have to see how the tax things work out. So we help them at that
Okay.
stage also.
Okay.
So right from entry through the journey and exit, we will
And to the
completely
exit.
handhold them. And this is an important service because it's not like handling a listed space investment.
Yeah.
Because private investments, the more you do, you will have more of document work, diligence,
Yeah.
reading of these documents.
Yeah.
And how do you then take care of it? You know, you need to have a consolidated view of what are the investments, at what valuation you entered. Has the company raised a secondary or a third round? And what is the valuation? How is it moving? So
Got it. So these family offices would usually come into the seed round or series A, B, how, or would it be
our
across?
comfort would be to get into at a growth stage at series
Okay.
B, C, or
Series.
later. But
Okay.
seed stage, we have done few investments because it has come through some of our clients.
Okay.
So if one of our client is investing in a particular one, mainly as a seed stage or at later stage, and we have also kind of done a little bit of diligence, and we present it to a few other clients who are also kind of interested in this space.
Okay.
If there is alignment, we also set up help in setting up a meeting directly with the promoters of the company.
Okay.
If they feel, because in a startup, you can't do much of diligence, right? You can only
Yeah.
see what is the projections and how
Yeah.
it is going to be. I
Yeah.
mean, if the idea is really good, I'm sure the clients are much smarter. I mean, they have more knowledge than us about
Yeah.
the space. So they
Yeah.
definitely would want to invest directly.
Yeah.
And we facilitate the transaction.
Yeah.
So document support is something which they need, which we will provide. But identifying the right startup to invest is mostly done by the families
By the
themselves.
families.
Yeah.
Okay. So for an entrepreneur to raise money from a family office or from a VC, what would the difference be?
Going through the family office has its own advantage. Like I said, it's a patient capital.
Yeah.
You get to interact with the family directly, whereas
Yeah.
in the fund, you are only meeting the fund manager, and the fund will have certain selection metrics, right? Mostly the funds have 1, 2, or 3 themes under which only they will fund these
Yeah.
companies.
Yeah.
Whereas if you're directly approaching the family or the family office, you are a little more broader. You get to present across the sectors. Mostly family offices are sector agnostic because the idea is
Okay.
to enhance your yield and
Okay.
not very choosy and particular about sectors. There might be one or two no, meaning filters of I don't want this sector, like very rarely. We have not seen that. Mostly people are agnostic as
Okay.
long as it has a good potential to deliver the returns and it is a promising sector and the other criteria like promoter background, etc. If that suits in, mostly family offices will go with it. So the biggest reason is family offices offer patient capital, also the support during this journey of the family, the investment, right? So that is a major player here.
Okay.
So for the companies, it's always, I would say it's very easy. I've seen personally, and some of the companies where we have invested, they have definitely appreciated the kind of support what we provide as a family office, because they also get promptly all the responses because we have everything, right? We also don't have to go to the family.
Yeah.
We act as a backup and we have all the required documents and everything.
Okay.
So it's very seamless. So the
Okay.
execution turnaround is much faster when you do it through a family office for the client. Yeah.
Okay. So in terms of the outcomes, what are the outcomes that you have seen with your startup investments?
See, as a family office, it's primarily you're doing it as an investment. So your outcome, what you track is how they're growing and what's the kind of returns you're expecting and
Yeah.
how they have achieved the returns.
Yeah.
So that's the only outcome which we will measure. Obviously, the returns would come only if there is the product is good, or the outcome, whatever was expected, whatever was the goal of the company while they set up the company, has been achieved. So
Yeah,
I
but
don't
in
know. So
terms of the sort of returns you've seen so far,
okay. Oh,
right?
you mean to
Yeah.
say what is the kind of returns it is
Yeah,
delivered?
from the startup
Okay, that's, I
investments.
think, too early to say,
Too early to
because
say?
it's all a 3-year, 6-year journey, and
Yeah.
we have started investing only in the last, say, 7, 8 years.
Okay.
And some of the exits we have made, like there's one investment in a skincare brand which we did, where we have kind of made slightly above 3%, 3x kind of return.
Okay.
And there have been other investments where we have kind of doubled all of that. So these are very specific. So I think the idea is to make returns. So if there is no
Yeah.
potential returns,
Yeah.
definitely we wouldn't want to invest.
Yeah.
And if it is not working successfully as per our requirement, maybe we'll have to exit. Also, we would recommend an exit. It has not
Okay.
happened so far,
Okay.
thankfully. Yeah.
Okay. So it's interesting that you say that these family offices are sector agnostic, because I would have
Yeah.
thought that they would invest in businesses aligned
Especially
with
a multifamily office like ours would be sector agnostic. But
Okay.
if there are families who are personally or privately investing, maybe they are selective. But wherever I have met few of them, they said it is purely from an investment perspective. So I'm okay and I'm sector agnostic. This is what we get to hear. So
Okay.
I believe they are sector agnostic because it's only from the angle of investment.
Yeah. So let's talk about lifestyle management, right? An interesting
Sure.
topic. So I was recently talking to someone who was managing a family office in China, and she said you should see the kind of requests that you get. I mean, it's like, I just want to spend the day shopping in Paris tomorrow and things like that. So to what extent, what is your role in lifestyle management? Do we see such requests coming in from India? How different is it?
So definitely family office is a lifestyle requirement, like I mentioned in the past. But I think so far we have not received such requirements of going for shopping to Paris, etc. But few of the requests, I'll tell you, somebody was traveling and they wanted to get a flower bouquet arranged at the airport. So they just called and we got it kind of coordinated and ensured that the flower bouquet is arranged. And then someone who was traveling wanted a particular Indian cuisine at their restaurant.
Okay.
So again, we had to contact few of our known connections there and got it arranged.
Okay.
And someone who was coming to India from the US,
Yeah.
she wanted some silk saris to be purchased.
Okay.
And she wanted to know in Mysore or Bangalore, which are the
Okay.
good, kind of stores where you
Yeah.
can get very good, high quality designer wear
Yeah.
saris. So that we
Okay.
have helped. And someone wanted for their birthday, for the special occasion of 50th birthday, they wanted to surprise the spouse with a Ferrari,
Okay.
right?
Yeah.
So we just arranged for a rental of Ferrari.
Okay. Okay.
I guess we have not reached the stage where we had, clients calling up saying that I want to go to shopping
Yeah, I guess
to
it's still
Paris,
early days
etc.
in India, but it's
Also, I think
interesting.
wise wealth is a philosophy, like I
Yeah.
said, right? So
Yeah.
our clients are not the ones who are looking at such exotic lifestyle requirements. What they would basically need is keep it simple, don't give me headache, release
Yeah.
my bandwidth, take
Yeah.
care of my most important aspects like the tax
Yeah.
compliance, legal,
Yeah.
regulatory aspects,
Yeah.
all of that. That itself is a lifestyle, right?
Yeah.
That's also
Yeah.
a lifestyle.
That
I
is
don't
makes
want
life
tomorrow
simpler.
a
Yeah.
IT notice or some
Yeah.
regulator coming at my door and saying that you
Yeah.
have not done this as per the
Yeah. Yeah.
policy. So that is one of my criteria for having a good lifestyle. So that is something which we have
Yeah.
seen so far, but I haven't received any request. We haven't received anything like
Yeah.
very.
But it's interesting to understand that for someone who owns thousands of crores, right? How would they spend their day-to-day activities? And you work with them so closely. But I mean, from what I'm hearing, these are people who are still running their businesses
Yeah.
and more focused on that. But what about the second, third generation, or has that not come up as yet?
In some families, the second generation is just, getting involved.
Okay.
So there, the families have requested, can you help my son or daughter also be part of the investment discussions? Take them separately, because if it's a common discussion, it gets to it'll extend to 2 hours or so, but then they say, can my son come to your office and just understand how the macroeconomics work? Can you just take him through the last 6 months, how the markets have reacted, how the markets have been trending? What are the key parameters which one should look at while investing? So I wouldn't say it's kind of an educational series, but people do give us these requests, and we find it extremely helpful and encouraging, because the families are involving their second generation, saying that this is my family office and they are going to be here with us for multiple generations, right? So obviously I have to play that active role in engaging with the second generation or the third generation. So we consider it as a privilege to engage with the children and the next generation, help them navigate this investment space, because for some it is quite complex, especially if the kids have gone abroad for their undergraduation and studies, and if they come back to India, and if the family says that you start looking at my portfolio, it can be very difficult for them to understand, right? So I would not say there is no limit, but they take time. It can be 6 months, it can be 1 year, again depending on the the appetite to learn, as well as the grasp, the ability to grasp. So we have done that, and it's been.
So for someone who's not directly involved in the business, like in terms of how allowances are structured, do you work on that as well? Allowances for people who are not directly involved in the business. I think this would make more sense for multi-generational.
Yeah. So see, one important aspect is when we are dealing with these family office clients is, of course, investment policy statement, all of that is there. But over maybe 2 or 3 years, we also try to understand and create a family charter. I have to bring this concept because that's very important. I wanted to
ask you that next.
Because the family charter comes into the picture, then maybe people also will think of setting up a trust. So when we do all this process, the settler or the author who is making these charter or the trust would provide guidelines, as in on what frequency the money has to be distributed, or who should get what, who all should be my beneficiaries, at what stages they will receive the money, or something like minimum age criteria or minimum education qualification, whatever, right? The author can decide. So the family charter would also be there. But we are also seeing that these days the families would want to actually give, because children want to have that experience of handling money. They cannot wait till the money comes to them, eventuality, inheritance and all of that. So I see a lot of families are very open in allocating a small portion to their children directly once they turn like 20, 25, whatever, depending on the age. They may want to give. The ratio of the amount could change, meaning the percentage of allocation could change, but they are experimenting. They are open to such experiments where they give some percentage to the children, or it can be a direct gift. In fact, that's the most efficient way of transferring money. So you gift some portion of your assets to your kids while you're there itself, and this kid starts handling it. Like the son or the daughter can start managing the money. So they will also get direct involvement into their investment portfolio. That will help them in learning and understanding the concept of investments. What are the risks and how the portfolio allocation has to be managed, all of that.
So what is their risk profile like for a second, third gen? They must be a lot more.
Yeah, it depends. So for some family, they say that, okay, this is the kitty which is meant to be preservation capital for multi-generational purpose. So they prefer making a risk profile at the family level. So at a family level, considering there are 4 or 5 family members, they say that this risk profile can be considered across all the family members. And then we start working on that. But there are families where they say that, okay, we are now kind of 60, 65 plus. Our risk profile could be different. But if my son or daughter wants to have a separate risk profile, we are open for that. So you manage that in a separate style, because their risk profile is going to be different. So you do a separate assessment, understand their risk profile, their goal, etc., and then you manage that money. So that is also possible. It can be consolidated at the family level and reported, but the risk profile can be different. That is also possible.
So you mentioned family trust, right? And this keeps coming up a lot. So is an HUF like a family trust?
No, HUF is actually not a separate legal entity by itself. A family trust is little more robust and it comes under the Indian Trust Act.
Okay.
You can actually, dictate everything in your trust document, and the trustee has to follow verbatim what is mentioned in the trust document.
Okay.
So it's more robust, I would say. In terms of governance structure, this trust will be more suitable, especially in the evolving scenarios and the changing dynamics of today. We should actually focus on a trust. Of course, those days there was this concept of HUF, more or less the same, but trust is more evolved today, and it is proved and it has worked well in the other parts of the globe, right?
Yeah. So, but what are the benefits of having one? So, for example, if somebody had to move their, let's say, real estate, some properties into a trust, that becomes a sale transaction
Yes.
from the
So it is
individual.
not. So any immovable asset, we would say that it has to come through the will.
Okay.
So don't directly move it into the trust. We'll write a will. In the will, it will capture that this property on, whatever happens, the eventuality post that, it has to go into this trust.
Okay.
Otherwise, if it comes directly, I mean, if you directly transfer, obviously there'll be a stamp duty involved.
But what are the other advantages of having like a family
So
trust?
the reason why a trust is set up by families is one, it is clearly a succession vehicle.
Okay.
And you want to have a trust structure for the succession rather than directly going into the family's hands, because the children or the next generation may not be ready or equipped to handle a large estate. So it can go through the trust in a staggered manner, or
Okay.
whatever manner that is being written in the trust document, or ring fencing the assets. If I'm an entrepreneur who has also got some have taken debt into my company or has got some
Okay.
leverage, then
Okay.
I need to ring fence my personal assets
Yeah.
from the company assets. So I would prefer having a trust where I am putting my personal assets into the trust, so that will take care of my family while I focus on building my company by taking debt and taking all sort of leverages. So ring fencing could be one reason.
By ring fencing, you mean that if any liabilities come on the individual, it would not affect the trust.
Because your trust is separate and the assets which are held in the trust is considered as a separate entity. Having the thing. So that could be one reason. Then ease of operation, because there are, again, we are seeing that entrepreneurs at the age of early 30s or even before that, they make substantial amount of wealth where they do not want to get into the day-to-day operations job of handling money or get into the tax part and understanding how the tax calculations will work, coordinating with your CA, etc. So there again, they prefer having a trust and a corporate trustee who can manage all of these aspects. So we act as a corporate trustee for many families, which means that we will take care of all of these, like your compliance in terms of regulatory, financial compliance, if any legal compliance required, all of that is taken care by us. So that kind of eases their bandwidth.
Okay.
So that could be one reason.
Yeah.
Or situations where you have a special family member who is not able to handle the wealth if it comes directly to them, or somebody who needs special support, then you want to ensure that whether I'm there or not, my person who's dependent on me today is completely taken care even when I'm not there. At least the money part I can take care by setting up into a trust, right? You don't know about the caretakers, but I'm sure hopefully the parents will definitely take care of that aspect. But money is again very important there, right? Even if you want to trust that with a particular agency or a firm who does these kind of care services, but you need to give money. So for that, you need to have a trust that can help. So there are various reasons one would look at setting up a trust. Again, if you have children who are living outside India and you have assets which are diversified, meaning which is across the globe, you may need to look at structures not just in India, maybe outside India also. In each jurisdiction, if you have different kind of assets, you may want to have multiple trust structures and then kind of marry it together in a will. These are again evolving, like we are seeing these days. So we worked with certain firms outside India, because each of them have their own tax governance structures, so we need to understand all of that.
So in terms of the age profiling, you mentioned some entrepreneurs in their early 30s as well. So what is your customer sort of age distribution?
I think mostly would be 35 and above, but the younger generation who are now involving and having discussions with us are of course in the age group of 20 to 25, like that.
Okay.
But the clients or the first generation entrepreneurs mostly are 35 and above, 45, 60, like that. Yeah.
Do you manage NRI Wealth as well?
Yes. There are few NRIs from the Middle East, from US,
Okay.
UK.
Okay.
Again, US has their restrictions, so
Yeah.
all investments are not possible for a US NRI. There are limitations, but we work with them as well.
Okay. You also mentioned in your LinkedIn profile that simplicity is one of your mantras, right? Like simple wealth management. Even for us at Property Angel, it's a very core value. So our values are based on trust, like transparency, relationships, upgradation, and simplicity and teamwork. So I understand the meaning of keeping things simple, but from a wealth management perspective, what do you mean by that?
Okay, so what I mean by that is many times when we see a client's portfolio, maybe for example for review, because that's the first thing which most of the clients say, that why don't you do a portfolio audit and review. Invariably, we see that there are many exotic products like your PMS, there are multiple mutual funds, there are at least like 70-80 stocks and 70-80 portfolio managers, AIFs, and all sort of things, right? And there's a lot of duplication, actually overlap between the strategies itself, so which can be avoided. So one of the things, first thing which we do is when we do the portfolio audit is understand how the portfolio has been created. Is it aligned with your risk profile? And then what is the kind of risk and how is it, in the portfolio, what is created, is it aligned with that risk profile? And then the quality of the portfolio, the cost structure in the portfolio. And then do we need so many products and so many line items in the portfolio? Can it be consolidated and make it simple so that somebody who is looking at this portfolio for the first time should not get overwhelmed, right?
Yeah.
Again, family office is at the highest in the pyramid, right?
Yeah.
And when you want this to be as a what you call next generation, if they have to inherit this, it should be simple, clean, transparent. Otherwise, they would not understand what my father or parents have created. They get overwhelmed with that itself.
Okay.
And that is when they say that I don't want to take care of all this, you take care of it. And then they get into something else. So this is something common, right? So we try to see that it can be made as simple as possible. Sometimes certain investment strategies, we have just played it through a mutual fund, or it could be just an exchange traded fund, an ETF, which can play a particular theme. So you don't need to have a complex product, right? And for us, it is very efficient because we work on a client's fee. We don't have any brokerage or a commission from any product manufacturer. So for me, all these are just wrappers, whether it is a PMS or a mutual fund or an AIF. As long as the investment theme and the strategy fits into the client's portfolio, it's fine for us. We don't have to look at what is the product wrapper.
Yeah.
Whichever is efficient and plays well and the portfolio manager is good. We have many forensic factors which we see. Once it clears all of this, then we just invest in that or go with that portfolio manager.
So we say that the wealthy are only getting wealthier, right? So what are some of the lessons that you have taken that can be applied from, any tips and tricks from these family offices that can be applied to retail investors as well?
I don't see all of these, what I've learned from these family offices can be implemented to a retail. But one thing which I've definitely seen is in the family offices in my last 12 years of experience is that time is the essence for them. For the client as well as for the investments and the decisions which they take. Time is of essence, and they just don't want to waste or miss a deal or an opportunity for the reason of, lack of decision making, time consuming, it goes back and forth, that they don't want. So that is why they have a professional team, and they expect and they appreciate that you have a professional expertise, senior people who are managing you. So they entrust us with this capability that, okay, you are there, you are a senior person, you have handled this, so you should be able to guide me in my decision making process. And then we tell them, okay, this is what is it, and this is good, this is not good. They will immediately tell us saying that, okay, I'm okay with that, let's go ahead. Or they will say, no, I don't want to go ahead, I will reject this. So that's decision making, and the timely action is something which I've learned with interacting with so many clients, the UHNI clients and the large families. But in retail, I would say starting early definitely is important for retail investors, and be a long-term investor. Don't just get affected by too many news which is there in the market. You need to be cognizant of the market news, but don't get swayed with too many information. And if possible, at a right time, choose a good advisor who can guide you. And stay invested, because power of compounding is the most important for a retail investor again.
Yeah, true.
Right?
Very true.
So stay invested for long term. That's what I would say.
Yeah. So with so much new wealth coming into India, I mean, the demand for family offices has only been growing. So do you have any numbers on the market size, how many family offices there are, how quickly they're growing, what might be the cumulative wealth that they might manage?
Okay. So I think around 5-6 years before, there were hardly 45-50 family offices.
Okay.
And since 2018 or 2017, 18, 19, we see a lot of family offices coming. The recent report says this close to 300 family offices are there in India alone.
Okay.
And maybe the cumulative wealth which these family offices are holding, maybe around $30 billion. Average assets of around $2 billion.
Okay.
And it's expected to grow at 14-15% kind of a growth CAGR. So it's going to be at least 1.5-2 times of the wealth in the next, say, 3 years. So there's a huge potential.
Yeah.
And
yeah. How are family offices in India different from those maybe in the US or more developed countries?
they've I wouldn't say very different, but there are many aspects which has to be considered, because culturally every country is different. India has different cultural aspects, regulatory aspects. The family office as a concept is very evolved in the US, maybe to some extent in China, but in India it is still evolving.
Yeah.
And the investment decisions are made in India also aligned with your family values. And considering the long-term harmony within the family members. For example, philanthropy or investing into a particular sector, they would want to consider the harmony of the entire family for a longer term. So in India, all these play a very important role. Whereas in the US, it's like there's a lot of autonomy within the family members.
Okay.
Right? They get some freedom. There's broad layout, and then they get to choose. Right? And also, it's regulated, very well regulated, the family office.
Okay.
I think mainly family offices in the US look at investments from diversification perspective, and they also look at a lot of exotic products. What I mean by exotic is they look at hedge strategy. They look at a lot of private investment opportunities, funds, and cross-border transactions, etc. Whereas in the India, we're still trying to learn how international investments can be done. Gift City is just coming up, so a lot of people are trying to understand how this whole Gift City investments will work. And LRS and the regulations are still evolving. So LRS limit is very less now. So you can't make a meaningful international investment, and unless you give a good allocation, the investment managers internationally will not even pay attention to your portfolio.
Okay.
So India, these are still at the early stage. So Indian investments are primarily domestic. Now looking at international diversification, and also a lot of real estate in India. Whereas in the US, I would say real estate may be a less investment. And though they have alternate space, but real estate could be lesser. But in India, it is still a very significant portion. I think family offices have gone through, and the wealth management by itself has gone through many stages of metamorphosis. Right?
Okay.
So it's changing continuously. I think we are all learning in this journey, because in the last 1-2 decades is when we have seen the significant wealth creation happening in India.
True.
So I think all of us in this ecosystem are taking this journey together. Right? While we are learning, we are also seeing clients wanting to know. So it gives us a lot of learning opportunity as well. Because if a client says that I want to set up something internationally, I have to first get into calls with multiple service providers in the US. Then you see whether US is better, or having a structure in Dubai is that better, or something in Australia is better. Then analyze. So it's a humongous learning opportunity for us as well.
So what are some challenges you face in terms of scaling a family office?
Okay, that's an interesting question, because it's very difficult to scale a family office for two reasons. One is you need to get the right talent, because when you say family office, you're looking at people who have done that, who have been there for at least 15, 20 years, who have got the expertise, who can handle a large family's requirements, a UHNI family's requirement. So we need to get the right talent, and who will also stay for long term. Because one thing which one of our very first clients and investor told us that, clients, not investor, clients told us that I don't want to see a different person. I have to see the same family. That is why I'm signing up with a family office. So that's very important aspect for us. So the right talent and a long term association with these. So retention of talent hence becomes very important, very difficult also, but that's an important aspect. And second, of course, is the cost associated with all of this, because whatever we are doing, the services, whatever we offer, all has to be top notch. It has to be high quality service. So hence you need good quality people, which comes with a cost. So if I'm looking at an investment advisor who's got 15 years, 20 years, then obviously the cost is very high, because in that front we are competing with the private banks and the other firms in the market, in the industry. So it becomes very competitive when it comes to a package, pay packages. So cost is another challenge for getting the right talent and retaining them. Especially in these kind of market scenarios, it's extremely hot at this point of time in the BFSI sector.
Okay.
Hiring is very difficult for us. Getting the right talent, even if we hire, whether they will continue with us for long term, is a big question. So these are two challenges which we see in scaling family offices.
Okay.
So in that scenario, a single family office again has this challenge in a slightly, I would say, a next level, because in a single family, typically you would have 4 to 7 average. If it's a family with 2,000, 3,000 crores of assets, you would have minimum of 3 to 4. Maybe 3 senior and 1 could be a junior just for doing the operational day-to-day work. But if it's slightly larger, above 5,000 crore, they will definitely have a 7, 10 members, because some would be focused on investments, some could be on the other banking transactions, etc., payments, and then some would be on the real estate or whatever the other things which the family wants this office to handle. So there again, the challenge what we see is, especially in private investments, for example, okay, every private investment is a unique opportunity. Now, you're within that 7, 10 people, you may not have the expertise to analyze a company which is coming from all these sectors. Or the person may not be capable to do the legal diligence also and the technical diligence and take care of the documentation. So again, that is a challenge, right? You have a good lawyer who only takes care of certain aspects of it. But when it comes to private investment, maybe he or she is not equipped. So again, you'll have to outsource. So that's an additional cost to you.
Okay.
Whereas in a multi-family office, because we're handling different clients, at any point of time, we have multiple clients, there are different expertise which is built in. And you have lawyers who understand the variety which is available, which is possible, right? And that is a cost average which we can do.
Yeah.
So that these are two challenges, I would say, which is very important to consider.
Attracting and retaining talent, I guess, is a challenge in any business.
Yes, absolutely. A big talent.
So as we close, can you tell us a little bit about your journey, how you set up Entrust?
Okay. So we were a set of bankers, primarily private bankers. So Rajmohan Krishnan, who's the founder and MD, he was part of Kotak Mahindra Bank. Before it became a bank, it was Kotak Security. So he's the one who was a founding member of the Kotak Wealth team, and he was heading that. And I was part of ICICI Bank. One of our other co-founders, Shashank Kade, has been part of the Kotak PMS team for a long term. And we all felt that as part of the bank or any financial institution which is available, we are only representing certain products and opportunities to the client. And most of the time, it is like a sell strategy. You have to take a certain opportunity to the client and see if it can be fitted or it can be given and sold. I would say either fitting or sold, selling is one of the things which you would do. And most of the time you're not very happy doing it. Back of the, when you come back to your desk, you feel that, okay, is this the right thing which I've done? Should I probably do it at a later stage? Is this a product which I should have given? Or can it be a different strategy at this point? But when I have the pressure of this product has to be done. There is a timeline within which I have to generate a revenue, and I have to sell so many number of products or some number of applications. You're always under the pressure. Whereas as a family office, you are on the client side. Buy side always, right? You are talking on behalf of the client. You act as a fiduciary custodian of the family, and you're getting empowered by the family to take the right decisions. So one of the things is, we firmly believe that family offices work well when they follow this 3E strategy, which is you engage, enable them, and then empower them. So you engage with them, you also enable them with requirement of access to statements, access to portfolio managers. You need to be directly connected. Only then the family office can take information, because you need to consolidate it and give a holistic view, advice. So then you empower them with all of this, and then that helps in the whole of decision making process and managing this money very efficiently. So that is something which is very important, and we felt that after being with the banking system for like 15-20 years, we said, let us do something which is more client aligned, and in that process we will have long-term association with the families, multi-generational relationship. And that is when we thought of setting up a family office, and this is in the year 2013, and that is when SEBI came up with this RIA license, Registered Investment Advisors, in India. So we were one of the first ones to apply for the RIA license. Hence we started as an investment advisory firm with RIA license, and then also have another entity created for execution, because once you give advice, clients also want us to execute it seamlessly. So we become the power of attorney holders and execute these transactions for them. Then if you have to create a trust or give them legal services, you need that support. So we built an in-house legal team, council, and we act as corporate trustees to them. So we have a legal services and trusteeship services in-house. Then accounting and taxation, real estate related. So there are multiple requirements, and all of this are made in-house. The idea very clearly was to be on the client side, completely aligned to them, act as their custodian, fiduciary responsibility, take the responsibility, and work on what is right for them by taking a fee engagement with the clients directly, rather than taking any other passback or brokerage or any other product manufacturers paying us directly.
Understood.
So that's how family office we built it.
That's how you built
and
it.
Till date, over the last close to 12 years, we have been maintaining this, and we have had excellent journey. We enjoy even today every engagement with our clients, because every time we meet a client and the family, it's like a lot of conversations come up, right? And it's not just about wealth management. There are various aspects which you touch upon. So maybe in the initial few months, it will be only about how to streamline the portfolio, how to bring in a structure to the portfolio management. But then it moves into, should I set up a trust? Why should I set up a trust? Who are the beneficiaries of the trust? How do I decide that? So those are interesting conversations again. Then they say, can you bring in my children also into it? Can you guide them? The next gen. So I'm very passionate about that as well. So involving the next gen into this family investments management, estate management. So those are some things. Or any concierge related support.
So do you have women run family offices as well, or is it very?
We have few clients. I would say it is still lesser in number, but that is my endeavor. I think we should work hard on that. I think we all have a role to play in that, right?
True.
It's also, I think many times when I talk to them, it's like it's a agreed division of labor sort of things, right? I manage this part, and he manages the wealth part. I'm good in this, I'm good in that. And I think that's where it is all, right? Money management is something which usually is handled by the others, but I'm personally very committed and involved with educating, or I wouldn't say educating, supporting,
mentoring. What about dispute management? And confidentiality in terms of, I mean, you would be aware if there is some sort of a dispute happening, and or would you not?
No. So firstly, dispute management, of course, can come up. So far, we haven't had any such instances with our clientele. But that is the reason you proactively take the decision of either having a family charter in place if you're a business family, or set up a trust so that these disputes do not happen. Always prevention is better. But if anybody needs any support, of course, we can guide them. as part of our business advisory services, and either do in-house support or connect them with the right kind of a law firm who can help in such dispute resolution, etc.
Okay.
But
Okay.
those are things which we haven't done so far, but we
Yeah.
can
You can
look
do that.
into it. Yeah.
Okay. Thank
Because
you
it's
so
been mainly first generation entrepreneurs so
Yeah,
far, so
I know.
it was not required.
Yeah,
Yeah.
yeah. So thank you so much,
Thank
Sreepriya.
you.
Thank you for
Thank you.
coming over. Thank you for your time, and wish you all the very best
Thank you,
at
Sapna. It was
Entrust.
wonderful talking to you also.
Thank you.
Yeah.
Hope you have been enjoying our podcast. At Property Angel, our mission is to make real estate affairs safe, simple, and efficient. And that is why we bring you these podcasts to empower the consumer so you have the right information. We are an asset management company. You can outsource your landlord responsibilities to us, including tenant management aspects, maintenance, rent collection, financial management, and all of that. If you have any such requirements, please do reach out to our team. Please do also like, share, and subscribe. If there's anything specific you would like to listen to, please do leave it in the comment box below. Thank you for tuning in.